Welcome to the Marriott Hotel in Worsley, Greater Manchester, for the Northwest Meet the Small Business Commissioner event with Hilton Smythe Finance. I'm Graham Robb, and today we've got a group of people in our audience who run small businesses, are engaged in small businesses, and a panel who have been advising and supporting small businesses all their careers. Immediately next to me is the UK's Small Business Commissioner, Paul Uppal. Then we have Gareth Smythe, who's the CEO of Hilton Smythe Group and Hilton Smythe Finance, which is sponsoring us today. And then Andy Nichols, who's the Senior Loan Manager at GC Business Finance. Now, that's a not-for-profit organisation. It's commercially driven, and it's dedicated to economic development, inward investment, skills, employment and enterprise. And Andy has 30 years of experience in finance and is currently helping deliver the Northern Powerhouse Investment Fund. And then Pete Wild. Pete is a corporate finance guy with years of experience dealing with businesses of all different sizes, but he works with his firm Main Wealth, which helps clients develop growth and wealth strategies. Now, he's also made a great name for himself in delivering finance sessions for the Goldman Sachs 10,000 Small Businesses programme. And he's also one of 3 judges on CNBC's business show Pop-Up and Startup. Ladies and gentlemen, your panel. Well, I'd like to start with a little introduction to each of you to talk about where your specialty is, and then throw open for about half an hour a general discussion about the state of business and business finance, business opportunities, maybe a bit of Brexit, and then 10 minutes of questions from our audience. So it's going to be that kind of format for the next 40-45 minutes. So first, Paul Uppal, your role is relatively new. Tell us how it came about and what your Department of Government is doing.
Okay, good afternoon, everybody. Thanks for coming along. I appreciate we're quite fortunate to be here this afternoon. I think Gareth and Andy were talking to me. We could have been in the car park of Bolton Wanderers this afternoon, but for a late payment, we've ended up here. So to answer Graham's specific question there, our office, the Office of the Small Business Commissioner, sounds very posh, very grand. What does that actually mean? It's a comparatively new body. We've been going for about just over 16 months, and it was set up by the Enterprise Act of 2016. We are not a governmental body. We're paid for by your good taxpayer money, by the public purse, but we're independent of government. But we are here specifically to help small businesses around this issue of late payment. Late payment, slow payment, non-payment, however you want to define it. And we define a small business as 50 employees and less, and we help you in relation to your interaction with big business. So if you're getting messed around in terms of late payments, or even if you feel uncertain in terms of the terms you're being offered, please speak to us. We have a very small team. We're based in Brum, but almost everybody, including myself, who comes from 20 years in construction, in terms of my background from a small business experience, everybody within the team, either directly or indirectly, has small business experience. So you can phone us, you can email us, you can do whatever you want to, reach out to us on LinkedIn or social media, whatever the network is. And in the last 6 months, we've managed to get over £3.5 million for small businesses. That's £3.5 million in terms of payments they were not going to get. That's what we can quantify. Later on, I'll probably talk about how people are just using our name just to go out there and say, look, they've been in contact with the Small Business Commissioner. But that gives you a bit of a flavour in terms of who we are. And we're free. Absolutely free. I know nothing is free in life, and we are paid for through your taxpayer money, but we have no other agenda than to go in and bat for small business.
Thank you, Paul. Gareth, you we're going under the name Hilton Smythe Finance, but the group does lots of different things. Tell us about the group.
Okay, yes, so thanks everyone for coming. So Hilton Smythe effectively helps small businesses, usually high street type businesses, but also moving up into manufacturing, engineering, that type of thing. Either buy or sell is one arm of the business, and more recently in the last sort of 18 months, helping people with finance, all types of commercial finance, and obviously the event sponsor today is Hilton Smythe Finance. So been helping small businesses, high street businesses, which is always challenging, and it's a challenging environment, but like I say, helping them to exit when they're perhaps retiring. Maybe they're struggling to survive, and when we look at finance options, or indeed an exit for them as well. So yeah, all encompassing really on the high street and small business.
Okay, Andy, you look after GEC Business Finance. Now, we were talking before we came onto the stage today. There's lots of things that your organisation does under a bigger umbrella. Let's talk about the small business bit first.
Yeah, well, we're an alternative finance provider. So we're not in competition with any other sort of lender. We have various public funds under our management, and the starting point really is that the business has tried to approach particularly the mainstream banks and has been turned down. At that point, then they come to ourselves. Where I think our niche is if a business perhaps, has perhaps maybe had a couple of difficult years, but has now got an opportunity to grow, we can sort of take the time to look into it in a bit more detail, in a way that at the lower end, the commercial banks don't do anymore. They used to do it, but as they've sort of swept aside layers of sort of relationship managers, and a lot of things are now sort of business credit scored, there's a big gap really, and that's the area that we fit.
Okay. Pete, you've been involved with your own business, Main Wealth, doing all sorts of things. But before we get into the business itself, tell us about the Goldman Sachs initiative.
So I do about 200 scaling companies a year for Goldman Sachs. It's a free programme for companies that really want to go for it. I lecture down at Oxford University for them, technically from all over the country. The requirements are very, very straightforward. You just have to be ready to go for it. And so we see an awful lot of companies struggling to grow, but desperate to. Yeah.
As an individual, I serve on one of the local enterprise partnerships in the North. We're responsible for a small business. And there's a definition we have of a scale-up company, which is a company that will grow by 20% a year for 3 years. Is that way Goldman Sachs see it as well?
Yes, they don't actually have to have demonstrated that. They have to show a certain level of commitment, number of staff, been going a few years, certain turnover. But we have them from 250,000 turnover upwards, and we've got some at 20, 30 million. And then we get them all together, and the actual network isn't sages on the stage like us. We're pretty useless after the course. It's these lifelong networks they make, and we've got people who are still meeting on a monthly basis 5 years after completing the programme. In fact, that's how I know you, isn't it? Because Gareth Hilton Smythe came on the programme, and setting up Hilton Smythe Finance was one of the things they decided to do as a result of coming on the programme. So
I know, and actually the great thing about this programme, it's with greatest respect, Paul, it's not government, it's coming from a big private organisation, very successful global organisation, but it does seem to be reaching to parts of the north other initiatives haven't reached. I know of 3 companies in the northeast of England where enterprise isn't quite as prolific as the northwest that are doing extremely well through it.
Hey, listen, they made me go up and do a session in North East. I've got a nosebleed. Yeah, so we did Newcastle. It was the worst night I've ever... and it was full, wasn't it? They were literally queuing out the door to come in. There's a desperate thirst for people who are trying to scale to work with other people who get scaling companies, as opposed to just startups. I hate to say this, I can't stand startups. So, just a waste of your time and energy.
Startups in the room? No, they're all scaling. That's great. You haven't offended anyone. Maybe people watching the video, but no one in the room. Right, let's go back up the table. Start with you, Paul. Start with you, Pete, on this, and then we'll hear views. Let's get Brexit out of the way. I'll give you my opinion, and you can disagree with it or not. I think, as someone who runs a small business, that we have a Goldilocks economy. It's just about right. Unemployment's right, wages are growing, but not too much. Inflation's a bit, but not too much. Interest rates are low, they're not too low, they're not too high. It's about right. What's everyone whinging about? And the truth is they're whinging about uncertainty. Is Brexit uncertainty doing damage, or is it something that is just a media thing?
So I'm not seeing it at all. So I literally do with hundreds of companies a year for Goldman Sachs. I did a session in London for 100, sold out, literally going there. That was about a month ago. Manchester just before Christmas, the North East. And I start off by saying, who thinks you've got a great opportunity? Who thinks the economy is looking great for them? And they all just cheer. It's, they're genuinely not seeing it. The companies I work with, and we've done 1,500 of them, they're not struggling at all. Genuinely not. They don't see a Brexit problem.
We'll ask the audience later on what they think of it. My own Brexit problems have been the larger companies, not the smaller companies. My firm is a PR firm. I deal with big companies like Bannatyne Fitness, which has more fitness club memberships than ever. But then you look at some businesses like I got a utility provider that digs holes in the road, and they needed some capital from an American hedge fund. The American hedge fund just said, well, we'll pause until Brexit's over. And it was that was the issue, not actually the state of play of the business market.
It's not like America's been wussy, though, is it?
No.
To be fair, we're finding money's on trees at the minute. Money's not the problem, I don't think, at the moment. But you're right, the bigger companies, they are always the ones led by a board with corporate governance procedures, so they kind of slow things down. They manage risk with time, so they just wait and see a little bit of time. Whereas entrepreneurs, opportunistic people just want to get on with it. Everyone I meet is doing well and has not seen any effect of Brexit.
All right, let's hear from Andy. Are you a bit more circumspect, Andy?
Yeah, I've seen both some opportunities and some concerns. I think the concerns is around that uncertainty, which is what everybody says. Investment decisions being put off, things that are happening from, and I think you do forget, but there's a lot of overseas businesses that have got, big operations in the UK, both the car industry, Japanese companies with electronics and so on. And I think over time, will that change? I don't know. I met with a business that we did a loan for recently where it was two Romanian people that were running a restaurant in Wilmslow. And they got an opportunity when a local wholesaler, wanted to buy the ravioli that they were producing in the restaurant and sell that to other Italian restaurants in the northwest. And so rather than use the Italian supplier, they've encouraged this company to set up and make ravioli on a commercial basis in Macclesfield. And that was an opportunity that I think has come out of Brexit, really, is that this wholesale is trying to get as much local purchase as they possibly can. And so I think there will be opportunities and unfortunately there'll be, I think, some other
and perhaps bigger businesses need to look at the opportunities of their supply chain as well. I represent a company that manufactures washing machines, and until it set up its washing machine manufacturing line, which is in County Durham, there were no British-made washing machines imported to the UK at all. That was it. Finito. No, you couldn't have a British-made washing machine. You can now. But getting it in front of mainstream retailers is difficult because they have established supply chains with big European and worldwide manufacturers. What about you, Gareth? What are you seeing on Brexit? Is it something that's causing any sleepless nights?
No, I don't think so. I think, the Harvard Business Review says 6% less investment. Probably a lot of that is overseas. And I think that's where the problem really lies, because a lot of foreign investors will be waiting to see what the pound does to maximise on return. So I think that's the main issue with investment of the 6%. In terms of buoyancy of the market, I mean, certainly at sort of higher level stuff, Pete, I think you'd probably agree it's pretty buoyant, and people are getting more money than they need sometimes with investment. I think at the lower end and the high street end, it's much tougher. But that's not to say that, for instance, the banks aren't lending. The banks are very much still lending. But I think there's a reluctance for people to maybe go to the bank. I think business borrowing's at an all-time low. And so really to push the economy, people have to borrow money, which, is what the Goldman Sachs thing, it's not all about that, but it's about leveraging and growing your business. And I think lots of smaller businesses won't take that risk. That's where the uncertainty comes in. But I think if you get that right, there's a huge opportunity in the market, and hopefully even after Brexit there'll be a huge opportunity too.
I suppose as well, if you think about investment, the scale you're at, which is more the smaller, medium-sized businesses, if you are an investor, maybe a private individual, you're thinking, well, where can I put my money? It can't go into a pension fund beyond a certain amount. The interest rates are on the floor. The stock market, yes, we'll have some in the stock market, but actually buying a business is now becoming a more rational use of investment money, maybe buying a restaurant and then having someone run it for you and so on. Are you seeing that happen as part of your business offering? I
think it's a really difficult question to answer, and only insofar as smaller businesses, for an investor to invest in a business, it has to be making some return.
Mm-hmm.
And I think the vast majority of businesses on the high street aren't at that level. I think where they are at that level, then yes, absolutely, you're going to see people wanting to invest some money and get a good return, put managers in. I mean, that comes with its own headaches, I dare say. But yeah, I think it does happen, but not as much as you might think.
Okay. Paul, Brexit isn't your specialist subject, but I know you see it in the ecosystem you inhabit. What is your view on the impact of Brexit in the current economy?
Well, when you're the fourth person on a panel to answer the question about Brexit, I'm going to try and make it a little bit different, because I'm sure, like me, you're sick of this. And gosh, my wife is certainly sick about it. She actually just switches straight over as soon as it comes on. No, but the serious point in answering the question, we don't probably really know the answer to that, Graham. I don't think anybody does, because we would not know if there'd been some clarity on Brexit where we'd be, is the short answer to your question. However, Peter's right. Entrepreneurs, business investors, individuals are optimistic by nature. So, and it also does depend on who you're talking to and where you are in the country. So I spend a lot of my life on a train or on a plane. And I tell you, when I go down to London, if I'm honest with you, it's like the 4 horsemen of the apocalypse have turned up. It's Armageddon. You're expecting locusts to turn up any day. You can get the next day, you get on a train, you travel for 300 miles, you'll have a totally different conversation. And I guess the way I'd answer the question is, and in an unusual way, and I can't help but avoid this, I'm a Wolverhampton Wanderers fan, but you can't have been... I was on a train last night up from Swindon, and I was watching on BBC Sports app. I couldn't get the BT connection on my phone, just listening to the results as it came in, as the goals were going up at Anfield. That be mindful of what the media say, because, the club that are down the road who play in red at Old Trafford, between the period from January to March, were appalling under Jose Mourinho. They were then the best club in the world because they beat PSG. They've now gone on the other side of that cycle. Now, Liverpool are the best club in the world because they beat Barcelona 4-0, but Roma did that last season. The truth is, be just mindful of the media. The pendulum swings very, very quickly. And I see football pundits on TV, much to my annoyance, who come up and say, oh, this is it, this is the new thing. Ultimately, Liverpool are not there or there, and Man United are not there or there, or Man City are not, although, they are playing incredibly well. It's probably, like most businesses, going back to your Goldilocks quote, they're probably all about there. There's minute differences here or there. But fundamentally, the pillars of the UK economy are good. But it's up to the British people. And the British people, generally, when you go out and speak to them, I've spoken to about 2,000 small businesses in this last 16 months in this role. They're generally optimistic. And they'll make the best of whatever they've got. But I think they do want clarity on it. They do want some certainty. And they don't want this continual drift, which is where we seem to be at the minute.
I was talking to a member of the MPC of the Bank of England yesterday, and he was explaining that there is some firepower still within the Bank of England if there are problems to do with Brexit. And the firepower isn't just around cutting interest rates or changing interest rates. There's also asset purchases. The Bank of England has 400 billion worth of assets that it owns. Put it into context, 40 years ago it had 20 billion. So there are other things, other buttons that can be pushed. Right, let's dig deep. Let's look at your individual specialist subjects a bit, and let's look at some of the issues. Let's start with you, Paul. I've got a note here about the way late payment affects businesses in the Northwest. Now, first of all, what is the definition of late payment, and how do you see it actually? What are the tangible effects on businesses?
Well, what we'd like to see is an exemplar where, if you're a small business, or any business, if I'm candid with you, you get paid within 30 days. There's no earthly reason why that shouldn't happen. If you go to Scandinavia or Germany, that is the exemplar that you actually see continually practice. And so for us, there's some slight difference here in terms of late payment and paying to terms. If you sign up to being paid 120 days, yes, that's your choice, and you go. But often, a lot of small businesses say to me they don't feel they have a choice in that matter. And so what we're here to do is kind of level the playing field in terms of that negotiation that goes on, and ask as well. What I always say to small businesses is just have the conversation. Now, I appreciate it's a difficult conversation to have because So many people say to me, I'd rather have a poor business relationship than no business relationship. But I will just give it with this one anecdote. I was in Coventry, business lunch, two businesses sitting, small businesses sitting right opposite me. Guy on the left, guy on the right. Guy on the left does exactly the same thing as the guy on the right. Guy on the left gets paid every 30 days. Guy on the right gets paid every 120 days with exactly the same business. And I said, why the difference? And he goes, look, we asked. We just pushed a bit back. So if we can give small businesses that confidence just to negotiate a bit more and highlight what we see as good practice and bad practice, we actually want to try and level the playing field here a bit.
You analysed 7,000 companies in the UK at the beginning of this year, and according to my note, 39% of invoices issued by small firms in the Northwest are officially paid late, and that is very much more than the national average, which is 32%, and very much more than London and the South East. So do you think that this money that's being tied up in invoice payment could be better used? Is there an economic rationale for the country behind sorting out late payment?
It's an important point, Graham, and I'm glad you've raised it, because it's actually relevant to everybody in the room, but particularly to the gents on my left, that I'm convinced now that this is singularly the biggest reason impeding business growth. If you're a small business and your cash flow is unpredictable, you're unlikely to go and approach a bank in the first place, unlikely to take on more staff, and your whole perception in the way you look at your small business will completely change, because nobody goes into business to do their VAT returns every three months or to chase bad debt. They do it because they either have a dream, a passion, they want to do something, utilize their skills. And ultimately, running a small business and planning for the future, having that ambition, having growth, is going to be impeded if you are being messed around or your cash flow is unpredictable.
How many people in this room have payments on their books that are older than 30 days that haven't been paid yet? About half. So just in terms of the worst case scenarios, you do have the right to name and shame the big firms. Let's have an example of one. There was one big high street chain, I think it's Holland and Barrett. What did you do there? What were the circumstances?
Well, Holland and Barrett, we had a very specific complaint. And they were actually named to us. I attended a select committee hearing. And following on from that, we approached them. The conversation we had was, do we need to speak to you? And they said, no, you don't. There's no statutory right. And so total radio silence. We then had a specific complaint, which we then pursued. Again, complete radio silence. We then did some publicity on this as well, which got a bit of coverage on TV and on radio. And now, what we would like to see, and what we are seeing in the embryonic stage of this, is Holland and Barrett now working with us to see how they can turn this around, because they've recognised that they've dropped the ball here. It's just unfortunate it's taken that publicity to sort of bring it to the fore. But ultimately, that is the main power we have to name and shame. But I would just add this on as well, Graham. I tend to get the feeling that this whole issue is not going away now. It's actually sort of pretty much anchored politically and within the business community as well, that this is just perhaps something that large businesses have got away in the past with pretty fairly easily. Nobody's really particularly challenged them. But certainly for our office, and I spoke about the impact it has on small businesses, it's also the impact it has on mental health. So if I just, this is a quote I use in construction. I'm sorry, it's a bit hard-hitting, but it is factually correct. If you're a young man in construction, you are 6 times more likely to take your own life than die from a construction-related injury. And a big part of that is around late payment. And I'm glad you asked the questions and people put their hands up, because this is almost seen as something that's very siloed for small businesses. They can feel very lonely and very isolated and feel it's very specific to them. When you actually come to events like this and you go out and you speak to small businesses, you actually see it's quite prevalent and quite widespread. And so just that feeling that it's not very specific to you, it's just common practice, but feel free to challenge it, and we're certainly here to help you from that perspective.
Okay, let's move on to Gareth. Now, your business specialty is buying, selling and financing transactions, and quite a lot of those have been in the high street. How are high streets able to change? How do you see it in your role as a business broker?
Well, I think we've already seen it, haven't we? The landscape of the high street has changed. It's moved, in my opinion, very much away from retail to coffee culture, and we're seeing lots of coffee shops, restaurants. We just look at Manchester, for instance. 10 a penny. And similarly, you've got microbreweries. I think we're becoming very much more of a social culture than a retail culture. That said, whether, things like business rates, we saw on the news this morning, that obviously there's a huge varying gap across the country of business rates, and because of the re-evaluation every 3 years, if an area's improved or declined, the business rates aren't keeping up. And I think the government probably has to do more to help with that. And I don't think it's just about late payments. I think it's a huge part. But, we look at businesses that perhaps don't rely on invoicing, and they're still struggling because costs are high, labour costs are high. So it's driving a squeeze. And again, profit warnings, JD Wetherspoon's a big company, but again, high street presence because of labour costs. Whilst turnover might be increasing, there is a huge squeeze. So I think it's much more than just looking at one or two things. I think the whole high street has to adapt, but the government has to help.
Let's cherry pick a couple of things. You already said business rates. Are landlords and property owners, some of which you may have to sell businesses for, but are they taking a realistic view on valuation of property?
Not usually, not particularly if they're London-based, which we find a lot are. And take Bolton for example. I dare to count how many empty units, but there's a couple where they are London landlords, and the rent expectations are so high that they just won't rent the units. So no, I don't think that all landlords are taking realistic expectations based on the locations of the properties. So
you look at someone like Mike Ashley coming in, trying to buy Debenhams, making a big noise about the landlord's costs. Is he right? And B, is it useful to have someone like that being quite adversarial and pugnacious about the issue?
Yeah, I think it is all a bit of noise. How that will end up, I don't know. He's obviously been through the mud a few times with a few different things himself. Whether that ends up like another BHS and its asset stripped, I don't know. It might do. It's a difficult one. You look at likes of Primark. They don't have at the minute, although I hear that they will have an online presence in terms of online shop. Now, they've managed to drive the rents down on that basis. Somebody very clever inside the company worked out that actually if we use this to our advantage, we don't go online, we can drive our rents down because we will only be on the high street and we'll be a magnet to all the other tenants. So I think it's about positioning yourself in the right place and doing the right things more than,
Okay. And one last thing before we move on. This links to where Andy's going to come in, I'm sure, as well. When you're offering finance, what are the key things you're looking at when you're assessing ability to pay of a business? Because here you have just described the high street. We talked about the high street. If you were assessing that situation 3 years ago, you would have reached a very different view on ability to pay.
Yeah, I think it goes beyond just the business's ability to pay. I think there's got to be confidence in the people running the business as well.
So you actually subject people to a chemistry test?
Well, I think there's clear signs. If they know what they're doing, you can tell. It's all about planning, isn't it? And if you know where you're headed, and you can demonstrate that, and just I think people meeting people, particularly with the banks. If the bank manager likes the person, I'm not saying they can do the deal because they're restricted by criteria, but there's more of an inclination to maybe go a bit higher. And maybe plead the case. And I think a lot of the time, if you get a particularly low value deal, for instance, for the banks, it might be too much work maybe to actually plead that. But if you really get on with the person and you think that they can make a go of the business, I don't think it's all just about the business's affordability, it's the person as well.
Okay, let's bring Andy in. It's a good point to bring you in, Andy. You've got this special fund for small business loans. It's fund loans of, I believe, 25,000 to 100,000. Is there any chemistry test on this fund? Do you have a sniff test? Are they going to be good enough or not? Or is it purely on the mathematics?
Neither really. It's the way I tend to describe it. It's like banking used to be 30 years ago.
Right.
So what we do is we sort of take the time to understand a business, understand what its history is, but also what its future should be. And I think the trouble at that lower end these days is the banks are willing to lend. There's a lot of other alternative finance providers, but they seem to all sort of want the same sort of type of business, which tends to be where you've got some good statutory accounts showing profitable trading and a net worth that's increasing. What we're doing, and the niche we probably sit in, is where perhaps a business has had a troubled year or has been investing in a new product and not made the profits that they perhaps should have done. But they're now at a stage where they've suddenly got some great contracts and, you know, they're worthy of support. What unfortunately happens at that lower end within the banks these days is it's this sort of business credit scored system which only looks at the historic information of the individuals that are running the business and of the business itself. So in those circumstances, there isn't anyone there on the ground that will actually meet them face to face, look at the contracts that they've got, understand where the business potentially could grow to, only if they're supported.
So do you have a pool of money that you will exhaust by loaning it out in chunks of between 25 and 100,000? And where do people have to be located to qualify for a loan from that pool?
We have a number of funds. We're a delivery partner for the Startup Loan Service. That's loans up to 25,000 for business, and that can be anywhere in England and Wales.
Don't tell Pete he doesn't like startups.
I know. I nearly contradicted him, right? But that is the new bigger businesses of the future, and that is a great service. It's a low interest rate. It's a government type of product. It's done through the British Business Bank. It's an interest rate of 6%. There's no fees, and it's up to 25,000 per individual. So you could get 3 people pooling their money together to start a business.
Right.
So suddenly we've got £75,000.
So that's the startup service.
That's startup service. The Northern Powerhouse Investment Fund, where we do the microfinance part, loans of between 25,000 to 100,000 for businesses that sell to other businesses.
Right. So you can't run a fish and chip shop with it?
No. We have some other money that you might do, such as Startup Loan Service doesn't have that same restriction. But that's a really good scheme. The whole idea is to try and bridge that gap between what's happening in the southeast of the country and what's happening in the north. And that's part of a bigger pot of money. FW Capital deliver the 100,000 up to 750,000 loans. Maven do equity investments from between 50,000 and 2 million. So there's a big range of different types of funding available.
Let's just shape some of the criteria, because let's focus on your microfinance for small business. First of all, it's the Northern Powerhouse Fund.
Yeah.
So the geography of the business is anywhere south of the Scottish border down to Cheshire, Lincolnshire and so on. So there's that band of geography. What is the definition of a small business for that? A micro business, I mean?
Well, no, it's just got to be an SME. The
Just an SME, right.
microfinance bit just talks of the actual amount of the fund, 25,000 to 100,000 loans. So it's just got to be a small and medium enterprise.
Does it have to be a limited company? Can it be
No,
sole traders?
Sole trader, partnership, limited company. And that geography for us is Cumbria, Lancashire, Greater Manchester, Cheshire,
Right.
and the Liverpool City region.
And what are the general repayment terms? Are you structuring it over a couple of years, over 10 years? What are the interest rates like?
Typically, 5 years seems to be what we normally do. It can be shorter than that, but typically a 5-year sort of medium-term loan is the sort of length of term we do. Interest rates, this money comes through the British Business Bank, and we're tasked with actually lending it at commercial rates of interest, so it can't be seen as state aid through that fund. And so there's a band of interest rates of between 8% and 15%. I've got to say, I've never lent money at 15%, and typically 9, 10, 11 is the sort of the majority of the clients get the interest at that sort of rate, which for what is we would call unsecured lending is still quite competitive.
Okay, and the key point, which you've just ended on, which I was going to ask you about, it is unsecured. You don't have to put your house up.
No, we look for personal commitment, but we're not looking for bricks and mortar. So we do ask for personal guarantee if it was a limited company, but we're not sort of asking for a second mortgage over your house or whatever. The main idea behind that is just if you are setting up a new business or whatever, and things start to get a little bit sticky, if you've signed a personal guarantee, you're more likely to just keep working at it and make it succeed than if you've not got something like that and you've got a limited company and can just walk away.
Okay. Right, let's pass the mic to Pete, because this neatly segues into your point of view. I tell you how I feel about this. If I buy a nice new Range Rover, which costs, 75,000 or something, and if I've got an income, I can get a loan without a personal guarantee to buy that car.
Yep.
But if I want to set up a business and go to the bank, even, God bless him, to the Northern Powerhouse Fund, sometimes I have to put personal guarantee. What is your view on this?
So I've been around scale-ups all my professional career, so going back into the late 80s. The biggest single inhibitor to growth for scale-up companies is access to bank finance at the right rates without personal guarantees. It really annoys me. We've seen permanent non-borrowers. So in 2011, a third of companies were permanent non-borrowers, which means they have never borrowed money and do not intend to. That rate is now at 50%. That means people are giving up on borrowing money. Why? When you're a successful, decent business, as the economy's grown, you're not going to put your house on the line, your personal assets on the line, just to go out and get a £250,000 loan from a bank when you've got a successful business. It's outrageous. What they should do, and to be perfectly honest, I'm here under a red herring here, really. I don't believe the late payments is the big issue for scaling companies, that's for sure. It is not. Sort your T's and C's out your terms and conditions, get better customers and grow a pair if you've got problems with late payments. When it comes to funding, if I was to go out to all the companies we talk to, we do a golden envelope test. We say, if we give you $500,000, what would you do with it? And it's amazing what people come up with. Yeah. So then it's like, can we get that money? Well, trust me, it's on trees. Gareth will tell you that. The money is out there is ridiculous. I just tried to raise £1.5 million for a company, and they were offered $5 million on the same terms, same equity stake, and it was all done within 8 weeks.
Fantastic.
Okay, seriously, it's on trees out there. What they're not prepared to do, prepared to give equity, but not debt. Why would they risk all of their stuff? Now, about 5 years ago, I sat down with an HSBC manager who did have some nerve, and I know quite a lot of corporate finance level guys, and literally, I had a client who wanted to raise over $250,000 to buy another company. It was an opportunity, but they were middle-aged marketing people who had a successful company, kids at uni, house, everything like second home. No way were they going to even put up any of their personal assets. So I sat down with the bank manager and said, give me 2 rates. Give me one with a PG, one without. Okay? Because in the end, interest rates are supposed to reflect risk.
Yep.
Okay? It's a core thing to get. Why on earth are they asking for anything else? Reflecting the interest rate. So we offered them 4% above base or 9%. And he fully expected them to take the 4 with a PG. And they went, I tell you what, we'll have the 9 without. They would rather have had 9 but with percent with no PGs than 4 with PGs. And I think the finance community doesn't quite get how entrepreneurs, the scale-up guys, again, I couldn't care less about startups. Far too much time and energy wasted on these kind of companies that don't move the economic dial. We want to get more jobs, more wealth in this country. We help people who've already established a business go to another level. And to do that, we have to change the finance industry, not late payment structures. We need to sort out the finance. We own half the bloody banks. They can do it.
Okay.
We can do it.
We put the late payments to a vote in the room. So let's have a look at this. Right, in this room, there's about 50 business owners, okay? Just a show of hands. I'm not going to pick on you personally, I promise you. How many people here, I'm not talking about overdraft, how many people here have a bank loan for their business? So very few people are on loan finance, very much a minority. The next question, going to Pete's point. If you were in need of bank finance for your business to expand it or so on, would you sign a personal guarantee? Yes? No? Who is no? So, actually, people want the bank to have a taste of the risk. Yes. And they're willing to pay for it. Let's say your final point. If you needed a bank loan for the business, would you be willing to pay above the commercial rate, let's say 4%? 4% above the commercial rate if it meant not putting your personal assets up. Yes? Show of hands. Yes. So that's a very interesting point. Paul, yeah, go on.
Can I just say, because I've done the Goldman Sachs thing now for 5 or 6 years, we only concentrate on scale-ups, and it's amazing how the financial community, in sessions like this, the government miss it. I'm a huge Lib Demer. Vince Cable, when he was Treasury, I literally sat in a room and said exactly the same thing to him, that if you want to move money to you guys, which if there's a Brexit wobble where they want to get it out there quicker, not just give it to the bloody banks to hold and repair their balance sheets, then the way to do it is to offer you differential rates, so the guys with good businesses already will take on a little bit more to go again. We're not interested in the weak ones. Let the market kill those buggers off.
By the way, did you do anything when you told him about it?
Yeah, Vince, what he did was he instituted that change on credit scores, because at
Credit
the time,
scores, yeah.
the banks used to just fail people on credit scores, and he actually introduced, as a result of the meeting we had, was literally he forced them to pass it down to another lender. So if Santander failed someone for having a credit score below 40, he forced them to go to Funding Circle. Does that make sense?
Yeah.
So we did do something,
Yeah.
but he wussed out on the big one, because we own RBS, for Christ.
Right, exactly. Right, I'm going to look. Get ready to give me some points from the floor. You don't have to ask questions. It's going to take points from the floor in a few minutes. But Paul, first, let's bring you in. It occurs to me that 3 substantive things have been said from this panel today. First, late payment that Pete doesn't agree with, but you're on late payment. Second, the issue of personal guarantees, and third, the issue of business rates. Where do you stand on those issues? We know where you stand on late payment, but what about Paul's issue and the business rates issue from Gareth?
Well, business rates, that gets raised with me every event I go to, and that's becoming much more prevalent. So that's get raised again and again. And I think ultimately it seems to be an antiquated tax for a 21st century economy, where you've got so many some business, obviously some are online. I mean, we mentioned Primark, perhaps less so, but that is something that gets raised again and again. The personal guarantees. Okay, so from a personal perspective, I think I took my first bank loan out at the age of 18. The guy was an Afrikaans rugby player who was living in the UK. You can imagine the first meet, this was 1988. I sat with him and I thought, well, this isn't going to go very well. If you know your history of where South Africa was at that time, I thought this is going to be a very difficult conversation. In the end, he ended up coming to my wedding, family friend. But Pete's got a point here. You know, do read your term conditions and do grow a pair. You know, I can't publicly say that.
Sounds like you're going to be
although I have said that on a microphone.
You've got a sound bite
but
there.
that will be, I'm not sure how the optics are going to work on that when we send that out on social media, but there you go. And when people Google us with that saying, you're going to get all sorts of interesting things on YouTube. But, you know, the sentiment, although I wouldn't express it as eloquently as Pete has, but there is some truth in that. So I come back. Why did I mention the fact that at the age of 18? And I've always dealt with a whole variety of banks in my own personal capacity. And I've always put the line down, look, we want to borrow and we want a partnership here, but I'm not going to put personal guarantees down. And just to let you in, they will do the deal. They will do the deal, but you've got to ask the question. Okay. I'm not talking a small business commissioner, I'm talking about my 20 years of business experience. Right. You know my view on late payment, it's the job I'm paid to do, but I hear what Pete says.
Okay, that's good. Rosie, do you want to bring the microphone? Are there any points that we want to take from the audience? Just, gentleman down here, can I just get the microphone to the gentleman in the check shirt? Have you, when you come to chase debts, do you ever chase them aggressively? Have you ever taken anything to county courts?
In previous businesses, yes. With this one, no, because although he is over 30 days, he's a friend of mine, so I know he will pay.
Very good, very good.
But we don't have much else. And what we've actually done recently is to go down the direct debit route. Mm-hmm. So we go cardless and things. Now it's so easy to go down direct debit. If that fails, then we're in quite a privileged position. I own a digital marketing agency, and most of our clients, we host their website.
Yeah.
So
you can close them off.
It's a pretty quick solution. Yeah. When I first started, I had a telecoms company years and years ago, and growing up, we had a college in Manchester, and every month they cancelled the direct debit without fail. And within 10 minutes of us shutting his phone lines down, he was back on and was paying, and he paid like excess fees. And he went on for 6 months. I don't know how he existed as a business. It was quite funny how you could just grab someone's pair and sort it out. Yeah, exactly. Yeah.
Right. Any other points before we close the session today from our audience? Well, I think you'll agree that we've covered quite a lot of ground with these 4 individuals on our panel. I want to thank them all: Pete Wild, Andy Nichols, Gareth Smythe, and the Government Small Business Commissioner, Paula Paul. Thank you very much indeed.